What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol AAPL for Apple Inc., of course. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be an update. We talked about it this weekend on the Sunday video over on the main channel, and what we've got in store today is a fairly interesting candle here. Notice that we do have a hammer. After an insane amount of selling on the open, there was a huge sympathy rally into the close here, which we're going to talk about in a lot of the bigger names across the board today. So with all of that being said, you can certainly see the lower wick did print off of this level we had in store around 157. Does this mean that it's an automatic long as we move into the remainder of the week? I would say not necessarily in Apple specifically, because earnings are going to be around the corner here. I believe they're after the bell on Thursday. So there's a little bit of wiggle room here for day trades and scalps, don't get me wrong, but for swing traders, probably not the time to be initiating a new position with this big event coming out again Thursday after the bell. So in terms of levels to be watching out for, obviously the hammer candle would indicate that buyers stepped up. It's feeling a little bit more bullish. Like maybe this is a potential short-term bottom here. It's not a guarantee, but we can certainly start to infer that based on the hammer. So upside targets, if we can clear 164 quarter again, then it's all about the back test of 168. We're not entirely out of the woods until we can get back above that level. Why is that the number? Well, from the daily perspective, all of this is overhead supply, and any sort of back tests just are going to give us, right, a break retest. It's all about having to recapture that zone right there before we can switch to being more optimistic. So that's the next main area to watch out for, 168 inside of Apple. In terms of the 30-minute structure that was put in today, obviously we did fill the overhead gap here, which is a structurally important thing. It doesn't mean that it's necessarily bullish. It just means the structure has been repaired. So that's no longer a target, right? So because of that, strong close, obviously the hammer, we've discussed all of that nuance. It is looking bullish into the remainder of the week. Earnings is really going to be the only thing that sort of throws a wrench into this, at least Friday, right? The one area I would point out from the 30-minute structure is here close to 159. Any pullbacks that come into that and hold it for a higher low, fantastic. Not only does it sort of respect that support trend line, but it's really the breakout point leading into the afternoon. So it could be a great place for a break, retest, higher low, and then we move along on our merry way. So that's what I'm seeing inside of Apple. Please play it day by day. Be very cautious, especially with earnings coming out and the Fed speaking on Wednesday. That's going to wrap up the video. If you enjoyed it or learned anything new today, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.